Hey everyone, NVDA reports their next quarter tomorrow. And so ahead of their earnings release, I wanted to touch base with you guys and give you a sense of how I'm thinking about the stock heading into the quarter. Now, as far as company results, I'm pretty optimistic. You can see on my estimates here in my model, I'm looking at revenues of $34.5 billion for the quarter. That compares to consensus revenue of $33 billion for the quarter. I'm also more bullish for the final quarter of the year. I'm at $39 billion, and here you can see consensus. Looks like I'm $2.5 billion ahead of consensus for the next quarter. Let's see. Now, look, we'll go to EPS, and then I'll explain why, even though I'm ahead of consensus, I'm still a little cautious on the quarter and how the stock might react. I'm at 77 cents for the quarter and 85 cents the following quarter. Looking at consensus, they're at 74 and 81. So I've got some pretty bullish estimates. Looking way out into the future, forward fiscal years on revenue. It looks like fiscal 26, I'm at 193, almost 194 billion right here. And consensus right now is at 185. So 9 billion, close to 9 billion ahead of consensus. And I am really ahead of consensus the following year. Consensus is at 222. I'm at 242. So nearly $20 billion ahead of consensus 2 years out. But all that said, I'm still a little cautious heading into the quarter. So if you already own shares, my recommendation would be that you consider buying some protective puts. And if you're just looking to take a gamble on the quarter, you don't already own shares, I would not be going long into the quarter. I could be wrong, but yeah, I'm a little cautious. And here's why. Let me share with you this little chart I came up with. Right? This shows price performance of NVIDIA over the last 6 months, but let's focus on since they reported on August 28th, right? They beat on revenues. They even beat my bullish estimate for revenue and EPS, but shares declined 18% the following week, on that day, and then continued to deteriorate over the course of the following week to a tune of an 18% decline, and that's because gross margins disappointed. This has just been AI is great, and revenues are great, and EPS is great, and just don't worry about it. But execution is finally starting to matter. Margins are starting to matter. And I've modeled them out, I think, pretty well. And that's a reason for some caution going into the quarter. So again, look, if the same thing were to happen again, some protected puts would save you here. And if you don't already own shares, I wouldn't buy into the quarter. Instead, I would look to see if this theme plays out once again, if margins are somewhat disappointing, and look for a better entry point. Now, if you had just held shares, you'd have made 14%, which outperformed the NASDAQ to the tune of 7%. So, it's a fabulous company. But going into earnings, I'd be a little cautious. And just to show you real quick how I was thinking about margins heading into last quarter. These are my estimates versus NVIDIA's actual results last quarter. As you can see here, they beat my revenue estimate by 3%. So it was really, really solid. But on gross margins, they only beat me by 10 basis points. I was modeling 75%. they came in at 75.1%. R&D, SG&A, nailed it there, 10%, essentially 3% for SG&A. So operating margin, NVIDIA actually came in 10 basis points below my estimate from a margin perspective. And here is why that matters longer term. Take a look at this chart. If we look at, my long-term estimates for COGS, right? I've got this gross margin going, already having peaked a couple quarters ago, right? The April quarter, and slowly but surely deteriorating back to historically high levels for NVIDIA, but still, 5 years out, a full 15% lower than what they achieved last quarter. So let's go back to this. Yeah. So here you can see their quarterly gross margin history over the prior, call it 10 years, and the future 5 years. Again, you can see here, this was their peak a couple quarters ago. This was last quarter, and this is where I have them forecast. The red is in forecast. So tomorrow after they report, I'll be turning this latest data point over from red to black. But, why am I forecasting this gradual decline? Everyone and their mother is investing in artificial intelligence, and everyone sees how successful NVIDIA has been. It's now the most valuable company on the planet. So their supply chain is in the process of getting significantly more expensive. The Blackwell chip is going to be a super release, and they're going to have some pricing power, surely. But they don't make the chip. TSMC makes the chip for them. TSMC is going to look to charge NVIDIA as much money as possible, certainly to meet all the increased demand. For TSMC to make all the chips that NVIDIA wants, to satiate customer demand, they're going to have to crowd out other customers' chips, and that's going to come at a price. So I expect TSMC to charge NVIDIA more for their manufacturing capacity. I expect labor retention to be a lot more expensive for NVIDIA as other companies who are developing their own chips look to poach NVIDIA's talent. And as other manufacturers' chips, right, like Google, Facebook, Amazon, Meta, that as those chips improve or come online, the next iterations, that's going to weigh on NVIDIA's pricing power going forward. So net, I'm still bullish on the company, but gosh, when we talk about valuation going into the quarter, it's already at $144. Let's take a look here what my valuation says. On a relative valuation basis, I like to look at, some of the other big competitors in the space, that the big portfolio managers on Wall Street are looking to add to their existing positions, or perhaps trim their position as it relates to NVIDIA. So if you're going to add or trim to NVIDIA, it's not just in a vacuum. It comes out of an already existing position in Apple, Microsoft, right? Meta, Google, Amazon, or even Netflix. So looking at the earnings growth relative to the PEG ratio, the price to earnings growth ratio, I've got a nice little regression here. The R squared typically varies from 85 to 95%. NVIDIA right now is perfectly priced. It is right there on the line. Based on my own earnings estimates, which are above consensus, The implied share price, today is $145. So it is already perfectly priced for above consensus revenues, above consensus EPS. But what I'm concerned about, so it's all that good news, even better than what consensus expects, is already priced into shares, fully priced into shares, save for the last dollar. Shares are at 144 right now. But what bothers me is that even with such a bullish expectation, already fully priced in, the slightest hiccup in any line item of their income statement might lead some portfolio managers to trim their positions. I certainly don't expect anyone to fully exit their position. That's just silly. But we could see another 10 to even 20% correction in shares just because of the run-up, the fabulous 40% run-up shares have seen since they troughed in early September post their last earnings release. So I hope this has been helpful. It's kind of it's a more nuanced view, right? I expect strong results, but I'm not convinced that those strong results are going to be enough to push shares higher than they already are. Shares have gone up 40% since early September. Okay, I mean that's 2 years worth of really solid returns over the course of 2.5 months. And based on my valuation here, shares are appropriately valued at $145, and they're trading right now, day before they report, at $144. So I don't see a lot of remaining upside to shares, but I do see the potential risk of downside. And I certainly think that the downside risk outweighs upside risk at current valuation. So if you own shares, I really, 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 really do recommend that you do buy yourself some protection, buy some puts to protect yourself from that downside risk. And if you're thinking about going long NVIDIA, I really don't think this is the place to go long. I'd really recommend that you wait for a more attractive entry point. So all that said, that's how I'm looking at shares heading into the quarter. I'm looking forward to seeing what they do, what their results are, and coming back in another day and a half and sharing with you how those results and their commentary on the call change my forward-looking estimates, if at all. Thanks. Till next time. Take care.